Hello traders, you're welcome back to the Forex Geek channel, and I especially welcome you to this video where we're just going to be briefly talking about supply and demand. Okay, in this session we are going to cover you know the basic things that you need to know about identifying and trading supply and demand zones so that you can use them with confidence across any market. All right. So, supply and demand are the fundamental forces behind all market movements. Okay. Supply zones, supply zones basically represent areas where sellers are likely to step in and push the price down. Those are supply areas. Okay. And I just gave you an example right now. You'll notice that this zone, this is the zone where sellers were dominating. As price got here, pushed it down. As price got here, pushed it down. Here again. And now it seems to be happening again. So this is a supply zone, right? Then demand is just the opposite. Okay, a demand zone is a zone, you know basically a demand zone is a zone where buyers likely step in and push price up. Now, when price moves strongly away from an area, it often leaves behind a footprint, which is a zone where big orders were placed. And these are the zones that we want to mark and trade from. Okay. Now, a strong supply or demand zone is created when price leaves the area with a sharp, impulsive move. This means that institutions and large traders were active there. Okay, so you want to look for zones with a clear base, which is a cluster of candles before the move. You want to look for zones with a cluster of candles before the move, and then you want to look for a strong move away, large candles away from that zone, and then it has to be an impulsive candle, right? And then a little pullback, okay, and a zone that is still fresh. Okay, consider the freshness of the zone, and what we mean is that a zone that has not been tested yet. As you can see, this particular zone now, for example, this was a fresh zone, right? And then this was an example of a pattern where we had a cluster of candles, and then we had an impulsive move, and we had a brief retest. You see, this retest didn't exactly even go deep into the zone, and then we had a continuation pattern. Meanwhile, it's important that you avoid weak zones. All right, try to avoid zones that have already been tested multiple times. For example, in as much as this zone that we highlighted here, there could be a possibility of price eventually coming down. Yeah, it's a possibility, but since this zone has already been tested about 4 times, then there is every chance that the zone might finally get broken at this point. So there is a possibility of us seeing a breakout from here, probably a retest and a continuation pattern. But if the zone still remains strong, then we might see a movement to the downside. So at this point, what we just have to watch out for is what price does next. Okay, if we have price give us a bearish continuation pattern, perhaps strong bearish candles, and maybe a breakout from this trend line. Okay, we even had a false breakout around this one. Okay, so if we have a breakout from a legit breakout from this trend line, we might actually want to look out for downsides. But if we have price climb above this and even we test it and starts going back up with a bullish candlestick confirmation, then we want to look out for buy opportunities. Okay, now to draw a demand zone, you just have to mark the lowest wick in the base up to the highest body before the strong move up. All right. So that is when you are talking about one particular touch, because you can see in this zone we have two touches, right? So when you are talking about, a particular touch, you can just mark the lowest wick. This is our base, right? So if you mark the lowest wick in that base to the highest point, so we're having this, right? Because this was our strong move up, right? This was the candle that kind of broke out. This was the impulsive candle we had, and then you can see this other impulsive candle. So if you're marking out the base, you can just do something like this. All right, so the basic rule is simple. You can just buy, you should actually buy at demand zones in an uptrend or when price reacts strongly to the zone. And then you should sell at supply zones in a downtrend or when price rejects the zone. Okay, keep the zones clean and accurate. Don't make them too wide or too narrow. Okay, always wait for confirmation before entering your trade, because this could be a candlestick pattern. um you know like I mentioned, probably around here now, since this is where price is currently. If we are going to have this zone respected, we need to wait for a bearish candlestick pattern. Okay, you need confirmations before entering your trade. So in that case, I would even say you will have to wait for price to break below this trend line and still give us a bearish candlestick pattern that shows that it is rejecting this zone before we jump into the sell trade. Okay, the pattern could be maybe a pin bar, an engulfing candle, or maybe a break of structure that shows that price is reacting to the zone. Okay, now fresh zones are the most powerful, so you may want to combine them with market structure to filter your trades. For example, only buy at demand zones when the higher time frame shows an uptrend. For your higher time frame, you can actually consider using the 4-hour chart. So if you have an uptrend, like currently we have an uptrend on the 4-hour chart, you can also we can consider looking for buy opportunities maybe on a lower time frame. Okay, you can go to lower time frame and maybe look for opportunities to buy since the higher time frame shows it. All right. Also, remember that supply and demand trading works on all time frames, from scalping to swing trading, but your stop loss and target sizes should match the time frame that you are trading. For example, if you are trading on the 15-minute time frame, and then you can see this particular trend line is being respected. Remember that I drew this trend line on the, was it the 4-hour chart or the 1-hour chart? I think I drew it on the 1-hour chart, if I'm not mistaken. Yeah. But if you go down to the 15-minute chart, you will see that this trend line has been respected multiple times. Can you see? So now, because the higher time frame, supports a bullish trend, or rather, the trend is bullish on the higher time frame, then on the lower time frame, if you want to execute your trades, you look for opportunities that are still in line with the higher time frame's trend. So we're going to be looking for bullish opportunities. We want to look for buy opportunities around demand zones. So you can find demand zones on the 15-minute time frame. You can still find demand zones on the 15-minute time frame. For example, we can see, if you look closely, you see that we have the demand zone around here. Can you see that? Can you see that we have the demand zone around here? So in as much as this is a bullish trend on a 4-hour time frame, we are still having zones on the smaller time frame, right? So this is a bullish trend. So we are not interested in selling around the supply zones, right? You can see it seems like we have a supply zone around here, but we're not interested in selling. We are only interested in buying around demand zones, right? So in this case, if we're going to extend this, so instead of buying, we'll even be looking at selling if price should come back to test this level. Sorry, we're going to be looking at buying instead of selling around this supply zone. We're going to be looking at buying if price should come back to test that level. Okay. So remember that risk management is very crucial, and whenever you are trading, make sure that you have a good risk to reward ratio, minimum of 1:2, and do not risk more than 1 to 2% of your account balance in a single trade. So if you found this video helpful, click the like button and subscribe for more beginner to pro trading guides. Okay, thank you for watching. I look forward to seeing you in the next video. Happy trading.